Hi, I'm Grant Stephen.
And I'm Chris Bernier.
And we're the Two Investment Guys. This week, Chris and I want to continue discussing some of the issues in the capital markets. At the moment, when we look around the globe at the global industry returns for stock markets, we've got the Toronto Exchange up about 3% so far this year. The Dow's up about 8%. London's up 5%. France is up 10%. Germany, the global leader, is up a whopping 25%, Chris. Hong Kong is up 19% this year, and Tokyo is up about 6% so far this year. So decent returns. Interesting that Canada's the global laggard. The more important news of the day, Chris, is the U.S. election, and we wanted to talk a little bit about some of the variables that the market's struggling with at the moment.
Yeah, well, despite those year-to-date returns, which are all in the positive category, the market does not like uncertainty, and that's one of the things that we've seen for months and months now is that the pending U.S. election has created uncertainty. We've seen it in the corporate sector where we're at an all-time high in terms of profitability and earnings, yet payout ratios for dividends are near an all-time low. And that's because corporations don't have a clear picture of what tax rates might be, what fiscal policy might be, the healthcare and benefit costs for their employees. And so it's been a bit of a wait-and-see approach in this current business environment.
Yeah, I think you nailed it there, Chris, when you said what the market really isn't taking. It isn't taking sides on whether it's the Democrats or the Republicans. It just doesn't like the uncertainty of what each win may bring. And therefore, in usual fashion, when corporations don't have clarity on that, they sit on their hands. And we think maybe we're going to work through that over the next couple of weeks as some clarity evolves around the election. We also wanted to talk about fund flows, and in particular what we're seeing in Canada is a bit of a rotation where money is coming out of the defensive names like the REITs, like the pipelines, like the telecom names, and moving into more of what we call the cyclicals, and that's things like industrials and financials. And so we see the money moving now. Is that the smart money? We don't really know, but it's just interesting to note that money is moving on the expectation maybe of improving economic numbers.
Yeah, absolutely. The other common theme is we've seen a continual flow into bonds, which some would argue are potentially priced at a bubble territory, and a continual outflow out of equity despite those really good returns that Grant talked about earlier. And we know there's a huge amount of money sitting on the sidelines in cash and cash-like investments. So you might want to talk to your advisor about how some of the fund flows might impact your portfolio and your future investment decisions. I want to thank you again for your questions and comments. Please keep them coming. You can contact Grant and I at twoinvestmentguys.com.
Join us next time. We're going to continue our discussion around some of the market factors and some of the things that we're seeing there. So until then, I'm Grant.
And I'm Chris.
And we're the Two Investment Guys.